I won't stop till I hear him say,
What is going on, CYPRX advanced YouTubers? Welcome back to another CYPRX YouTube video breakdown. As always, if you're interested in learning about cryptocurrencies, commodities, indices, foreign exchange, please go ahead and consider subscribing to the YouTube channel. In today's video breakdown, guys and gals, we are going to go over a tweet and a trade ideology that I sent to you guys out a couple of days ago on July 31st. Today is now August 2nd. So this was 2 days in advance that I sent you guys a trade idea, which is now currently floating over 100 in pips in profit, just to show you guys that we put our analysis here on the line at CYPRX for the world to see that we know what it is that we're talking about, putting our money where our mouth is at. You guys can see the tweet right here. I said Gbpjpy above 156. Look at it. Q3 August, here we go. If 156.000 breaks bearish, I will reevaluate the swing trade. Bullish targets for the month of August: number one, 166.00, number two, 167.700. And if you guys pay attention closely to the screenshot that I sent you guys can see the psychological levels that I specifically said on Twitter that I was going to enter in at. Okay, we have 159.500 to the T, which is where we reacted to current price action. And I'm going to break that trade down for you guys. This is probably going to be one of the most in-depth YouTube video breakdowns. So even if you don't trade Forex, stick around for this YouTube video breakdown, because you can use these same methodologies in commodities, crypto, indices. It doesn't realistically matter. The market makers move the markets all in the same way. If video breakdowns like this help you guys out, make sure that you are smashing that thumbs up button. I know that it's a lot to ask, right? But, you know, it helps boost the YouTube algorithm, and we are trying to grow a channel here, and we really do appreciate it. For anybody that is interested in the CYPRX Technical Analysis Mentorship Program, you guys can email me with the email and the link in the description down below. As always, you guys can visit cyprx.teachable.com to get enrolled in our mentorship program. We only have a couple of seats left. I'd say probably for the next couple of months, we are going to be allowing students to join. And after those couple of months are over, maybe towards the end of this year, we are going to halt entries to the CYPRX program. With that being said, as always, blessings to you guys. Let's take a deep dive into this trade video breakdown. So before we get into the actual entry over here, you guys can see that this trade is currently floating 100 pips in profit. Again, the screenshot that I shared with you guys, I also sent to the CYPRX students, and I also walked them through this current price drop in Gbpjpy, where you guys can see some screenshots in the Discord where I said to them that I'm looking for, you know, price pullback before we do see a rally to the upside. So just kind of helping them walk through Gbpjpy current price action. I'd even mentioned to them that I was looking for a deeper pullback, maybe into 160, 159, 800. And overall, I had sent them this screenshot of the 159.500 overall target. Okay. But I want to really break down for you guys how it is that we're getting these targets here at CYPRX, so that way you guys don't think that we're just making this stuff up. And there's actually some validity behind what it is that we're attempting to teach. Okay. I try my hardest not to put anything out into the market that I can't prove is actually happening. Okay. So that way you really get an understanding of what it is that we're attempting to teach. Remember, we teach how to trade against retail methodologies. We teach how to trade in tandem with the bank and institutionalized order flow. So with that being said, we are paying attention into extreme detail on specific zones and areas in the market where the bank and institutions put in orders on the higher time frame, if we're looking at higher time frame setups via the weekly time. Okay, so right here, how we got this 159.500 psychological level area of interest that I sent to you guys on Twitter. I'm going to break that down for you guys. This is really going to give you guys clarity as to targets that we approach here at CYPRX and the logic behind our targets. So I'm going to replay price action all the way back here and just go into an extreme detailistic perspective on how we got that 159.500 psychological level accuracy. Again, we are extremely accurate here at CYPRX because we pay attention to these things. So if we go back before this massive rally that happened on Gbpjpy that you guys saw, and now we're currently in that retracement phase, and now we've reacted from the zone, how we got that psychological level and why it is that I sent that specific psych level out to you guys. Well, first of all, we see trendline liquidity above these highs, and I mentioned to you guys for quite some time that the third touch of a trend line is, again, how retail traders are taught that is the most important touch of a trend line. However, that is false. Banking institutions do not trade based off of retail methodologies. The markets do not move in tandem with trend lines. Okay, that is all a retail trap. The market makers are building liquidity when you see retail patterns like this in order to drive the market through that liquidity to push price higher, okay? So with that being said, they know that over-leveraged traders are trading these sell positions here. Well, I want to take your attention to a specific date. And again, we teach specific dates and times, and I'm not going to get into all the specificities. I hope that that's a word, but on how we got this price action information, but just to show you guys how accurate this is, look at the date down here at the bottom of my screen, okay? This is May, this was, I believe, a Monday. So this is where the market opened the previous day, right here in this general vicinity on a Sunday. Okay. Now, with that being said, look at the market maker pattern that prints here. This is, again, something that I teach you guys to identify on the YouTube channel. And I go into an extreme detailistic perspective with the CYPRX students on this market maker pattern. So if this is the week's opens price action, right? This is where the weekly open started. Well, we see what the market makers did here. They set up a liquidity trap underneath of a low. They came back to liquidate any money underneath of this low, pushing price down into discount for themselves, and then they took buy positions. So here is that low that dipped beneath an area of liquidity, i.e. a previous market structure low, to grab the momentum that the market needs to manipulate sellers. Again, that third touch of a trend line happened right here during the Asia session open, during their manipulation window. Then the banking institutions took discounted buys. They then pushed price up. They took a second buy position during New York session, and then they boosted price all the way to the upside where GJ started trending up, and then they came to liquidate all of this retail money above this trend line. So this was the most significant area for us where the banking institutions created a low that swept liquidity and then created a higher low that led to the market price that drove price to sweep the liquidity above retail methodology highs, okay? And then started trending GJ. And I'll get rid of this replay method here in just 1 second to show you guys how we got this psychological level 159.500, which is a major psychological level that we pay attention to here at CYPRX. We highlighted from the candlestick bodies at that second higher low after the sweep of liquidity down to the wick low during the sweep of liquidity and extended that box all the way over to what? The right-hand side. Why? Because we know that if the market makers push price back down into this area of interest, they are more likely inclined to be taking discounted buys based off the higher time frame. If we switch to the 8-hour chart and we get rid of the replay mode, we can clearly see that this would have been a discounted area for the banking institutions if they push price back down into this level. Okay, so you guys can see again that retail methodology trading pattern right here, triple touch of a trend line, 1, 2, 3. This was again that well-defined area that we just jumped down to on the hourly chart to identify where we see that sweep of liquidity, that higher low after the significant sweep of liquidity. We also have a triple EMA crossover, but we'll get into that in maybe another YouTube video. That's also for the CYPRX students. So I'll get rid of those EMAs. We're not really indicator-based traders here. We trade with naked charts here at CYPRX, but we see that that is where the rally took place, and GJ ran all the way up into the highs during June at roughly at around 168,700. Okay. So since then, the market has retraced, and this is the screenshot that I sent you guys on Twitter. Okay. Price action was roughly around here. So I'll go ahead and I'll replay price action. We see the 31st. So what was the market doing? The market is now in the point where it's creating liquidity to the up and the downside. Majority of traders are, again, they have over leveraged sell positions above highs in the form of trend lines, and they have over leveraged buy positions beneath lows in the form of trend lines. Now, the screenshot that I sent you guys, again, if you pay close attention, has the psychological level 159.500 on it. So what were we expecting? I even sent you guys a little arrow like this, okay, for price to come back to the upside, right? Once it taps into, again, that significant area of interest that we had established over to the left-hand side. It's all just logic. The banking institutions, again, like I've told you all, after they liquidate retail money, like to piggyback off of previous institutionalized orders, or we can see this was the last institutionalized order that led to a grab and a sweep of retail money. So with that being said, the banking institutions are building on more retail liquidity. Again, look at this, the triple touch of a trend line, guys and gals. You cannot make this stuff up. 1, 2, and 3. And then boom, what do the banking institutions do? We sit on our hands, we wait. You guys can even see in the CYPRX group chat, I said that I would like to see a significant pullback before we see a rally to the highs on GJ. This is when the market started trending down, okay? Boom, we tapped into that significant area of interest. Now we're here. Now I will dive down into the lower time frame, i.e. the 15, the 5-minute, and the 1-minute chart to talk about our entry criteria here. If you guys are still here and you guys are learning, smash that thumbs up button, because I'm telling you guys this information is crucial. You guys can clearly see that we know what we're talking about way in advance, 2 days in advance. Who's doing this? Please show us. And this is not to be cocky. This is to show you guys that you are learning from someone who can show you days in advance that they know what they're talking about. That's all. That's the only reason why we're doing this. It's not to say that we're providing signals. It's not to say that we're the best in the market, because we're not, right? There's other individuals out there who are good as well. We're just here to show you all that we have a mentoring program that will teach you how to identify this stuff that is affordable and actually gives you valuable information. That is one thing that I never had when I was, a beginner trader. Let's say 7 years ago, almost in October, it'll be 7 years that I've been involved in this market. I did not have somebody that I could count on. I did not have somebody that I could learn valuable information that I could not find on the internet from. And I was overcharged. I paid over thousands of dollars for the mentoring programs that I enrolled in when I was a beginner student. That is another reason why we charge the way that we charge here at CYPRX. It is to allow the normal person to be able to afford a really good mentorship program that provides many, many hours of content. Okay. I mean, there's an unlimited amount of content on the CYPRX material because I constantly upload videos. Anyways, okay, not to toot the own horn, but so the analysis, right? Coming down into this trading session during London, I'm going to go into an extreme detailistic perspective on how we were able to catch this move. If you guys are still here, again, make sure that you smash that thumbs up button. So now we have all this higher time frame analysis. Again, when we jump down to the lower time frame, remember, it gets fractal. Fractal price action means that these 1, 2, 3 8-hour candlesticks are going to look like 50 to 60 different candlesticks on the lower time frame. Okay, so understand that when we go down to the lower time frame. But here you can even clearly see the pattern on the higher time frame via in correlation with the lower time frame. What do we see here? We see a low set in place by this 8-hour candlestick. We see this 8-hour candlestick sweep that low. So here's the sweep of liquidity. We see this 8-hour candlestick create the significant higher low that drove price higher. So it's the same pattern, but now let's go into it fractally. Again, what we're looking for and how to react to price action here at CYPRX is we're looking for a low to get established on the lower time frame. We're looking for the market to sweep that low, and we're looking for the market makers to take buy positions that then break a previous market structure high. And we're looking to get in over to the right-hand side somewhere on the fractal nature of things, if those are the confluences that align. However, because this was a higher time frame confluence setup where we already knew that the market makers were going to react to this significant area of interest, i.e. highlighted from this blue area of interest, we were able to react. You guys can see my MetaTrader 4 screenshot entry. I entered in with 3.5 lots, was at 159.504, and I'll share that with you guys right here. Okay, so now let's jump down into the 15-minute, see if we can see anything of significance on the 15-minute that I want to pay attention for you guys. All right, so check this out. Okay, I have these areas marked off. Again, what do we see here during this Asia session to Asia session rollover? We see market manipulation in the form of retail money. Okay, I had this identified, and this is when I started to say to the CYPRX students, I would like to see a deeper pullback. Okay, right here, what can we see? Again, confirming the methodologies that we teach to trade against here at CYPRX, which is a triple touch of a trend line. When you see this, you are sitting on your hands and you are saying to yourself, the market makers are building liquidity to scoop up that money to then hopefully drive price higher. And once we see that significant signal, we will then react to price action. Well, guys and gals, look at this. Look at what Asia session actually did. Asia session took 2 buy positions in the market before they passed price action over to London session. And you can see that here. They manipulated lows. They then took buy positions. They manipulated lows again. And then they took buy positions after liquidating those lows twice because they knew that they were running out of time before they had to pass price action over to London. So they had to take buy positions before doing so. Then look at this price action again, guys and gals, and you can see my MetaTrader 4 entry. It was during London session. Right here in the significant area, London session opens. Well, where does London session get past price action? At a high. During their manipulation window, we already know that bank institutions are not going to buy from a high, a fractal high. So what are they going to do? They're going to dip price down lower. They're going to manipulate early buyers. Then once they liquidate those buyers, we will react to price action. So now that you guys can see that on the 15-minute chart, let's jump down to the 5-minute. And I'm going to show you guys how we caught the sniper entry based off of the CYPRX confluences and the pattern that we seek to enter into the market after it plays out, which again is a low that gets set in place, a sweep of that low. And then we know that once the market matches this bearish move that sweeps the low with bullish momentum, that somewhere over to the right-hand side, we are most likely going to get a higher low that gets created in the market that continues the trend. Why? Because we know that the market makers cannot facilitate one institutionalized order to drive price higher at this low. That would look funky. The market would just trend up, and that's unrealistic. We know that the market makers have to add to the order that they placed into the market multiple times in the form of discount. This is what creates the market structure fluctuations, higher highs and higher lows. So what we're seeking to do is, after this pattern plays out, give ourselves a well-defined edge in the market that eliminates risk, again, minimizing that risk and maximizing our reward to target retail money over to the left-hand side, somewhere in this area, maybe in the form of a trend line, right? Okay, whatever it is that we're looking or seeking to target, it has to be logical in the market. Okay, so with all that being said, now let's jump into the entry criteria. Over here during London session, you guys can again see from the MetaTrader 4 screenshot, we entered in at 159.504. And what we were seeking to target was all of the money above the Asia session highs, which you guys can see clearly. The market makers are again pushing price up into that significant area as of right now. Why is that? Because we're operating on the higher time frame at a low. So we know logically on the higher time frame, the market makers are not going to sell from a low to continue price down. Again, we have this blue area of interest that we marked off on the higher time frame over to the left-hand side, and we extended that over. So we can also see how that is a confluence. Again, building confluence is to have the confidence to take a trade. Okay. So coming into this London session, if you guys are not lost as of right now and you're taking notes, again, this is extremely crucial to the success of your trading by understanding all of the information that I'm providing here for you. Nothing that we constitute as financial advice. We're just attempting to show people the reality of the market, and we're not giving them fluff. Okay. So what do we see here? London session during the manipulation window. It's literally hilarious. We see a triple touch of a trend line. So here is, and again, let me change this to the template manipulation box. Boom. Okay, this is the general manipulation area during London session. Well, what do we see in these two areas during the manipulation window? Early buyers and trend line liquidity sellers in the form of a triple touch. One touch here, two touches here, three touches here. So all I was simply doing was waiting for price to break out of the manipulation window. Again, I'm not going to give you guys those specific well-defined areas, but we know that this is the general manipulation window. Okay, what do we see? The pattern that I teach you guys. And again, this is just a 5-minute chart. We see the market violate a low right here. There's money beneath these lows. The market bullies its way down into those lows and then shifts structure, shifts momentum. The momentum that was pushed down into this low gets matched with bullish pressure. Not only that, but we're rejecting that major psychological level, 159.500. And I've told you guys multiple times on this YouTube channel, if the market makers fail to show an interest to create lower lows and lower highs beneath a psychological level, then they have no interest in dropping price lower. They are most likely taking their buy positions, again, discounted buys from the higher time frame based off this blue area of interest from these lows. Okay, this is discounted price enough for them. You can see because they manipulated price beneath a low to give themselves that little bit more of a discount, and then boom, they inject money into the market that breaks previous market structure. So this high right here broke previous market structure. So now we have the well-defined pattern that we look for to enter into the market somewhere over to the right-hand side at a higher low, constituting the fact that the market makers have to add multiple positions to their overall order. Okay, again, confirming what it is that we're teaching here. So once the market violated a low, broke previous market structure high, simply all we did was we seek to define the higher low that is going to get created after the market sweeps liquidity. Well, we know that we have a Fibonacci tool, which again is a tool to measure institutionalized discount. So taking our Fibonacci, again on the 5-minute chart now, from the low that sweeps liquidity to the high that broke previous market structure, you guys can see that these wick highs broke the previous market structure high, or the bearish price action that came down and bullied its way into these lows. Okay, so now we have a BOS right here. You can classify that or identify that if you guys like drawing on your charts. Personally, I like to just identify this with my naked eye. But some of the students here at CYPRX like to mark up their charts. We have that BOS to confirm that the market has shifted momentum away from that bearish pressure, and boom, We have the 50% discount, 62, 70 to 79% discount, which we know the banking institutions like to add to their orders at these price levels. And boom, we see the market inject money back into the market. And you guys can see that my entry was all here in this general vicinity. Okay. This was, again, giving ourselves a well-defined risk to reward ratio. Okay. I showed you guys this on Twitter days in advance, that the entry was going to be roughly at around 159.500. And if the market dropped even lower, it was going to be at 159.300. And currently from that screenshot that I sent you guys on Twitter days in advance, you guys can see now that we are up over 100 pips. Who's doing that? Okay. Putting our money where our mouth is at multiple times in a row. We're doing this on crypto, on XRP. We're doing this on forex. Okay. It's really showing you guys that you can come to this YouTube space, and even if you're not interested in joining the mentorship program, you can listen in on these video breakdowns and you can learn valuable trading information that hopefully benefits your trading career. Okay. So now coming into this New York session, how could you have scaled into a second position? Just to show you guys again that these confluences will play out during multiple sessions. Okay. So I entered during London session. However, there was a second opportunity, which the majority of CYPRX students caught during New York session. And I'll share a couple of those screenshots with you guys here. Here's a couple of the students, different positions that all were traded during New York session. Again, where the majority of us here at CYPRX are New York session traders. However, I just so happen to be up during this London session to catch this move. But we can see some simple ideologies behind this New York session. Number one, where do we see, guys and gals, price got passed to New York session during the open? At a high. So if we were to retrace this price action again, so many people would be like, oh, you know, all you're doing is hindsight testing. No, no, no. Listen, guys and gals, coming into this New York session, you would have had all this price action information, correct? Yes, you would have. You would have. That is undoubtedly correct. You would have had all this price action information. So what can we see that can give us an edge in the market, a well-defined RR trade based off of what we see? Well, number one, we see a trend line building. Okay, we know retail money most likely sits beneath here. Why? Because we know that prior to every single session is a what? Manipulation window where AI is predominantly controlling the market. Okay, well, boom, we see retail money getting set in the market during the manipulation window. That's one confluence. Second confluence is price gets passed at a high during New York session. We already know as retail investors, smart retail investors, okay, here at CYPRX, that market makers are not going to buy from a high when the past two sessions, Asia and London, bought from lows, a low here and a low here. So what is New York session most likely inclined to do? It's most likely inclined to liquidate early buyers, push price down at the discount for themselves, and then take buys from where Asia and London bought from. Again, confirming the ideology that the banking institutions like to piggyback off of each other. Here's a little video snippet of one of our CYPRX traders putting this into the market. Again, he even says, pay attention to what he says. You can see that after the manipulation window breakout, he waited for a price depreciation because he knew that banking institutions were not going to buy from a high. The market dumped, and then he put in his buy positions. Okay, here's a little video snippet of that right here.
Good morning, bro. Really quick voiceover on my breakdown this morning session. So we seen right when we left the manipulation window, we seen that it grabbed a little bit of liquidity and it rejected 159,500. And as soon as I did that, I put my buy stop on this high and it tapped me in. Boom. It tapped me in. I was targeting like some highs really, really high, right? But I was being realistic, and like you said, once we take out highs, we start operating in the realm of uncertainty. And yeah, I just had to react fast today.
Okay, boom. So once the market breaks out of that manipulation window, you guys can clearly see what the market makers were doing. They pushed price down at the discount. So what could we have done? We could have found, again, that higher low after the sweep of liquidity during London session, okay, that drove price higher during London session. We could have taken our Fibonacci from that higher low, all in this general vicinity. Again, the Fibonacci tool is a tool to measure discount and price. So here's that higher low up into the high. And we can see that the banks and institutions during New York session pushed price down. Would you look at that? Into 70 to 79% discount. They then took their buy positions. Here was a second well-defined RR trade. Again, trading the CYPRX confluences, stops in a healthy place beneath a low and targeting retail liquidity. We already know that there's what above these highs? Early retail sellers in the form of a double top formation. Look closely. This is a double top formation where retail traders are most likely drawing some type of imaginary resistance here, and they're selling from these highs. Not only that, guys and gals, but what do we see coming into fruition above these highs? A trend line. Okay, the market makers trade against this. They build these areas of liquidity to sweep internal liquidity to then come and attack external liquidity. I sent you guys this trade days in advance. 2 days literally in advance is now a 100 trade pip move. Okay, blessings to you guys all. You guys can see time and time again that we put our money where our mouth is here at CYPRX. If you guys are interested in that technical analysis mentorship, learning all of these advanced strategies in extreme detail, the link is in the description down below. Don't be afraid to reach out to me, schedule a Zoom call, ask any questions that you have. Just reach out to the customer support email in the link in the description down below. And, ask for Cypress, ask to schedule a Zoom call with me. We can hop on a call. We can chit chat, maybe we'll break down some of your trades, talk about what you've done so far in the market and what to expect during this mentorship program. As always, blessings to you guys all. I cannot get any more accurate than this. And I cannot, I cannot stress enough that what we're doing here at CYPRX is we're providing value to people. Not only do I give you guys these notifications days in advance on crypto and in the forex market, okay? But I'm putting my analysis on the line for you guys, okay? Regardless if you're, involved in the mentorship program or not, even if you're just a day trader and you're here for information, okay? Who else is doing this, okay? Who else is putting accurate price analysis on the line for the world to see, okay? Days in advance and having it play out. We're really trying and attempting to show people that it's not hard to mind control yourself in this market. Again, 90% of the information that's out there on the internet, Wycovian theory, order block theory, support resistance methodology traders. There's people out there that sell indicators. There's people out there that trade indicator-based trading strategies. All of that, you guys and gals, is rubbish and junk. And it is filling the masses' minds with market manipulation. And you guys are the ones most likely whose stop losses we are attacking here at CYPRX. Okay, that is how we teach our students how to trade against the herd. If you're looking for a more in-depth analysis and to get out of the herd mentality and to start trading in tandem with the banking institutions, the real whales in this market, not because some Wycovian trader told you that that's how order flow goes and blah, 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 because we don't teach Wycovian theory here. We teach straight market manipulation patterns. We teach specific times in the market via specific sessions, via specific patterns that play out, and what psychological levels that we seek to identify price action entries at. You guys already know how to reach out to me. Blessings to you guys. I hope that you guys enjoyed this video breakdown. Smash that thumbs up button before you head out. Make sure that you're subscribed to the YouTube channel. Don't forget that we're going to be giving away 100 XRP once we reach 10,000 YouTube subs. We are well on our way. I couldn't thank you guys enough for supporting this YouTube channel. As always, be cognizant, be aware, and I'll see you guys in the next YouTube video breakdown.
I won't stop till I make a change. I withdraw on the things I make. I turn flaws into flawless traits. I build tall, never capped in space. I won't stop till I hear him say, oh, oh, la, 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 la.